Good afternoon, ladies and gentlemen. Good afternoon, and thank you for those who have been here with us since morning. This is our final session of the Invest in Africa Summit. So welcome once again to the EBII Africa Investment Risk and Compliance Summit. And the topic of this panel is changing investor perception of risk in Africa. This panel will discuss the role businesses, regulatory bodies, and government play in ensuring compliance. It would also highlight the current opportunity for African banks and government to reposition strongly as vanguards of the policy environment, and in so doing, purposefully change the narrative around investment risk in Africa. So the EBII Annual Risk and Compliance Summit is actually organized by the Emerging Business Intelligence and Innovation, and it's in association with Zenith Bank Ghana Limited. So as I mentioned earlier in my opening speech, I mentioned that the fact that the African continent, there's been a lot of positive it's a lot of positive things in the continent. Prior to COVID-19, 8 of the fastest growing economies in the world were coming from the African continent. But of course, COVID-19 has stalled that slightly. But despite that, there's been a lot of innovation that has come out of the continent. I also mentioned that if the African continent can attract investment into its thriving SME market, then the continent will have the power to lift itself from financial dependency. Now, the problem is that the global financial markets tend to treat Africa as a homogeneously high-risk region, with very little acknowledgement of the diversity of economies and geopolitical landscape and level of socio-economic development within the different regions in Africa. And of course, this results in expensive financing and a restrictive flow of investment. Such misapprehensions are leading many investors to overlook the opportunity that Africa offers. We're going to have a discussion in this panel. I've got here with me, today with me, we've got Hisham Al-Arab. So he's the chairman and managing director at Commercial International Bank, which is one of the largest private banks in Egypt. He leads a team of more than 6,800 professionals who have transformed the institution from wholesale lender into Egypt's largest private bank and private sector bank, leading the sector on key metrics including revenue, profitability, net worth, and market share of deposit. I've also got here with me Professor P.L.O. Lumumba, a professor of law and advocate of the High Court of Kenya and Tanganyika, and founder of the P.L.O. Lumumba Foundation. Thank you very much. It's such an honor and a privilege to have both of you with me here this afternoon for this conversation. Before I go straight into the question, I'm going to ask Mr. Hisham to just give a quick intro about what he's going to be discussing and brings to the table this afternoon before I go straight into the question. So, Mr. Hisham, the floor is yours. It's a pleasure. Thank you.
Well, thank you so much. I'm honored to be invited with the group here in this panel. I'm not going to go through the traditional talk about the demography of Africa, how many people are using mobile money, or the number of projected of trillions of dollars projected consumer and business spending. Those are all numbers that people really know. What I want to talk today about is even if you think of African countries per country, not as a continent, unless the domestic investors don't have the confidence to invest in their local market, you don't expect international to invest in their markets. So if we Africans don't have confidence in our continent, how do you expect the international to invest in our continent? Unfortunately, most of the mainstream media, all the news they mentioned about the continent, not necessarily a positive news, apart from very few programs like BBC Africa, talks about success stories here and there. But really, we don't see headline positive news about the continent. So when you talk to people about what do you know about Africa, someone in Latin America or in the US, or in Asia, they know only the bad news. There was very good statistics done by some universities like Harvard and others about the a survey they did with some of the international CEOs, and they asked them a simple question: what is the number of African companies that makes more than $1 billion of revenues? I'm not surprised that the number of people who answered zero. In some countries, they said zero number of companies. Others thought it's 20. The most optimistic or the highest on the survey, they said 150 to 200. In reality, in 2019, there were more than 400 African companies that produce revenues more than $1 billion. And that number will grow every year. And by the way, many of those African companies are operating across the continent. It's not like a South African company in South Africa, or an Egyptian company, or a Kenyan or Nigerian company that works in Nigeria or Kenya only. No, they are cross-border companies. So the biggest example of success is not only the demography, the expectation, the consumption, but really is the African companies that operate cross-border. Yes, there are challenges. We understand there are challenges worldwide about the risk of knowing your customer, corruption, and other those things. But when we look at risk in Africa, we should not look per country. We should take a regional approach to risk. And that regional approach should be supported by harmonized policies and regulations that will attract investments. I will stop here, and there are other topics I will address, but I will leave the floor for you, and then I'm happy to take it further.
Thank you very much, Mr. Hisham. Thank you for that intro. I'm going to go to Professor PLO Lumumba to give us a quick intro before I dive straight into the questions. So, Professor, the floor is yours. Over to you. Thank you so much.
Thank you very much. Let me say that I'm very happy by the approach Hisham has taken. Number one, the problem of Africa is that we don't tell our story. And because we don't tell our story, we allow others to tell it. There is some sense in which it does make the market and the attitude of those who deal with Africa toxic. But the reality is there are things that are happening in the continent which are very positive. And what I'm happy about is that we are having this webinar during the week that the African Union has received the office of the Africa Continental Free Trade Area, from which the FCATA will be operating from January out of Accra, Ghana. And I believe that that is going to be a game changer. If we begin to break the tariff and non-tariff barriers, and we begin to allow goods and services and other things to begin to move without let and hindrance within the continent, then it's going to unlock the potential. It's going to put money in the hands of the people and going to enlarge the market. I think that is very positive. The other thing that is critical, which must be appreciated, is that there are a lot of regional efforts. If you look at what has been happening in the SADC area, what has been happening in the COMESA region, what has been happening in the ECOWAS region, and in the COMESA region, and I believe even in the Maghreb, one begins to appreciate that Africa now recognizes the need to make doing business easier. And I think that is what you need in order to energize and catalyze processes that will attract real investment, where there is transfer of technology and the creation of real jobs. And Hisham will agree with me that in the banking sector, for example, you can now see Kenyan banks in the Democratic Republic of Congo, Nigerian banks in East Africa, and I think that is a good thing. In the area of cement, for example, we are now beginning, Dangote is competing with Lafarge and others. So one sees a continent that is opening up in a very dramatic way. And one of the critical things that we've got to do is, number one, to begin to involve our institutions of higher learning so that they are not ivory towers. I know that your initiative is incubated at Harvard. I would have loved for it to be incubated at the University of Ghana at Legon, or to be incubated at the UNILAG, the University Business School at Lagos, or Stellenbosch, or Nairobi, or Cairo. And if we do that, we are going to create an environment where we energize the local companies, and we also create a situation where collaboration between foreign companies and African companies is going to be mutually beneficial and symbiotic in a way. And I want to conclude my intervention at this stage by saying that for the moment, there is a sense in which we cannot forget that Africa still continues to operate in silos. If you look at the former Portuguese colonies like Angola, Cape Verde, Guinea-Bissau, Mozambique, and you look at their law, their legal regime, you find that the umbilical cord between them and the Lisbon government is still much stronger than they ought to have with South Africa, for example. And the other thing is going forward, we must, and the Americans will not be happy with this, but we must begin to de-dollarize our economies. Because the more we dollarize our economy, the more we make our economies dollar dependent, the more we are susceptible to externalities which are not generated from within the continent. And lastly, I want to say that the AfCFTA, if it begins to operate at full throttle, is going to create an environment which I think will be for the best in the best interest of the continent of Africa, and those from other continents will want to collaborate with Africa. But we must tell our story. There must not be sideshows in BBC or Al Jazeera or CNN. And I can't conclude by saying that this is the year of silencing the guns, because as long as there are conflicts within Africa, it undermines and threatens business and makes Africa unsafe. And I hope that we are going to take this very seriously so that we silence the guns and create an environment where business is possible in a sustainable way. Let me conclude in that way at this moment. Thank you.
Thank you very much, PLO. That's really good. And also, I like the fact that it's been mentioned over and over again throughout the day about the harmonization of rules and regulations being a way forward in helping Africa in terms of how we're perceived by the West. If we can have that harmonization of rules and regulation, then the continent can compete better with international markets. The question that I have, my first question, and that goes to Hisham, is what is the current opportunity for African banks and government to reposition strongly as vanguards of the policy environment, and how can we purposefully change the narratives around investment risk in Africa? I know you've touched on it slightly, but would like that expanded. Thank you so much.
Yeah, sure. Let me tell you what we have done in our bank with the discussion about the free trade agreement that the professor correctly touched on. You have to realize that only 16% of the trade in Africa is between African countries, while you compare that to 52% in Asia, and of course 73% in Europe. Obviously, that number will move from 16%, at least will reach the Asia number of 52%, and this is a huge opportunity. We cannot carry on as African bank doing business and trade business and financing trade while we cannot take the counterparty risk of each other. So what we have done 2 years ago, we said, I can deal with my colleagues in Congo or Nigeria or on South Africa or Ghana through an intermediation of European bank. We have to deal directly together. And gradually over the last 12 months, we managed to establish lines, at least for now. I think we're in excess of 30 counterparties within the continent that we can deal directly together without resorting to someone in the middle to confirm our credit lines. This is a very simple milestone to send a message to the world that we as Africans, we can take the risk of each other. Let's do our homework. The second thing that I think would send a good message as well. Now with the technology is developing using blockchain, there is a project in for the blockchain. We're using it for doing KYC, know your customer process. If that is harmonized within the continent, talking about open banking again, it will happen like in Europe. The using the technology of the blockchain for the KYC, that is a huge opportunity for financial inclusion across the continent. So I'm talking about the macro and micro. On the macro side, between us as financial institutions dealing together directly, plus when you move to the next stage of an open banking, how you allow individuals to have their accounts regardless within that big pool of financial institutions within the continent. Mind you, that one of the challenges that we in Africa have is the correspondent banking lines. So if we facilitate the lines to each other, that will enhance the 16% to more than 52% of inter-Africa trade. I hope I answered your question in as much as I can.
Thank you very much, Mr. Hisham. You have answered the question. And I'll come back to you again with further questions. But at the moment, I'm going to go to PLO. And the question for PLO is, what role can the African regulatory bodies and government play in ensuring compliance? So for example, things like improving effectiveness and efficiency of public policies carried out by regulations and alternative policy tools. So in that sort of area.
I hold the view, and Hisham has adverted to it in one way by saying that part of the problem that we have is that we have this multiplicity of legal regimes. And the net effect is that if you want to move goods, say from Nairobi, Kenya, and those goods are to be taken to Cairo in Egypt, you are going to confront multiplicity of legal regimes. And already the beauty is that that is being appreciated. And what we have seen at the level of regional bodies in East Africa, for example, in order to grapple with rules of origin, for example, the East African Community Common Market Protocol is dealing with that. That is also to a certain extent happening in West Africa through ECOWAS. And you can also see that happening in SADC in the southern region, and that also under COMESA. And we have seen commodities such as sugar being given the kind of protection that they deserve. And I think going forward, and this is indeed the raison d'etre of the African Continental Free Trade, and I hope protocols to deal with this, that you even move from the regional protocols which attempt harmonization and it becomes continental. So one begins to see very positive moves, very much like you saw in the early days of NAFTA before it was rejigged during the Trump administration, or what you see in the Asian countries and what you see in the European Union even before Brexit. But I think right now, the beauty of the African situation is that we are beginning to learn from the mistakes that were made by the Europeans, and therefore we should be in a much better place in terms of protecting domestic markets, but enhancing their capacity and creating an environment where they can thrive. The game changer is going to be harmonization of legal regimes. So for example, if there is the Kenyan Companies Act, which is making it onerous for an Egyptian company or a Zimbabwean company to operate, we've got to have continental guidelines that talk about how to ensure that the regulatory regime is a one-stop shop, so that if you are moving goods, say from Cape Town in South Africa, you don't have to grapple with a legal regime in Zimbabwe or in Lesotho or in Central African Republic in Bangui. So a lot of protocols are going to issue from the administration in Accra, Ghana, and Addis Ababa, Ethiopia. And in the early years, there is going to be resistance, because when you begin to bring in competition, there'll be resistance. Certain local companies will say, we want to be protected, and there will be need to protect certain sectors of the economy. But ultimately, I think the dividends that will be derived from a uniformized regulatory regime are going to be much better for the countries and ultimately for the peoples of those countries. It is already happening. That is the beauty.
Thank you very much, PLO, for that answer. I've got some questions for Hisham, which it's from the audience that was sent in. And the first question is, what do you feel is the biggest strength of African banks right now regarding changing of investors' perception of risk?
African banks, all of them have applied the IFRS 9. It's a way to present your financials. And the central banks, in fact, they are following up the most recent regulatory requirements. And they are very stringent with the regulatory requirements. I personally think that the risk within the African economy is not like in the financial institution. It's a more of the, I would say, the risk of how we can make it an inclusive growth. Okay, there are excellent success stories in the continent, like in Kenya, where they managed to use mobile money. And by the way, it's mobile money is labeled by Kenya. It's something that invented in Kenya. Now, within the continent, we have 122 million active mobile money users. That number of 122 must at least triple so we can reach a larger number of people. So access to finance and democratizing the financial service, I would say, is the biggest risk. The risk is not on the balance sheet of banks. The risk is not the liquidity within banks. The risk for banks is not being unable to penetrate the wider number of Africans, especially the youth that are coming to the labor market. And democratizing finance is not only about giving loans or finance to micro or big projects. Democratizing financial services is a right, because when you talk about money transfer, if you move to a digital and use the recent technology in money transfer, you can cut down the cost of remittance across Africa by at least 90%. And that's a horrendous cost. That's a very high percentage that people pay. So again, the risk here is how can we include a higher number than the 122 million mobile users and reach at least triple that number within the continent. This is the risk.
Thank you. Thank you very much, Mr. Hisham, for that. I've got another question for you. And the question is, in your opinion, which is our biggest risk at the moment, and what can quickly be done to minimize it? So you've touched on that pretty much. So sorry, the next question I have for you is, after the lockdown, Africa, so I know a lot of African countries are currently still in lockdown. So it says, after the lockdown, Africa, which major milestones have to be taken to take the banks back on track? Thank you.
Well, after the lockdown, it will be challenging for businesses, especially the small businesses, not the large one, because the small businesses is relying on the cash flow. And cash flow is the lifeline for a small and medium-sized business, as well as the large corporates. But there is an opportunity there, because I think the lockdown has magnified the importance of the digital right within the continent. Why it's important to reduce the cost of the internet connection from the current levels, why it's very important that everyone has to be connected to the net, why the use of technology is critical, and the startups to help agriculture, healthcare, not only financial service. There are too many things will change in the way we conduct business and the way we run our life. So what I want to say, what governments have done within their means so far in terms of debt standstill for many corporates is important. Now, when the economy gets back, it will be challenging and very important for banks to understand their customers and help their customers. It's not only the government will help customers. Banks need to understand their customer needs until they are up and running once more. It's something that the world never seen before. We never seen it in our continent before. We don't have the same muscles like the US and some European countries where governments can pump billions of dollars to bail out companies. It's the community that will bail out companies by debt standstill, rescheduling debt. We have to look at things in a different way. We cannot carry on conducting business like the old normal standard, at least and for the coming 2 to 3 years until the economy worldwide gets back to normal.
Thank you very much, Mr. Hisham, for that answer. I'm going to go to Professor PLO. And so, Professor, this question is for you. So we talked about the role that the government can play in regards to policies that they can have, and you mentioned the harmonization of regulations will be a nice way forward. In terms of practicality, because this is a conversation that has been going on for some time, it's not a new conversation, but not much seems to have changed. I know there are some countries that are doing their best to tackle corruption. And I know that also from your previous work experience working in anti-corruption in Kenya, you've done a lot of work around these. So the question to you is, in terms of practicality, what should Africa do? These regulations are exciting. We've got the AFC, FTA, that is also talking about harmonization of trade laws, which to me, it's brilliant and it's a nice way forward for the continent of Africa. But that doesn't seem like it's something that would happen today. It's a long way ahead, well, in the near future. But aside the trade laws, there are several other regulations, financial crime regulations, just other regulations that we need to take into consideration. But and so how do we practicalize this after we've made those laws? A lot of the times there's also issues around the judicial system. When someone breaks the law, does the law really work? Like, does the country, their legal system, how effective can it be? So these are all questions that are coming up, and I don't know whether I'm explaining myself well, but I think you get the message. How do we make it practical going forward and make it more realistic, and not just discussion that we're talking about all the time, but bring it into reality and to help investors then see the continent as we are moving forward and they can begin to have more comfort in coming there to invest?
In fact, that is part of the problem, that our story is being told by others, and many of these positions that are held are actually perceptions rather than reality. Just this morning, I was dealing with some young people who are operating in Kenya, Uganda, Tanzania, and the Democratic Republic of Congo. And the question they wanted me to answer from a legal perspective, if they are going to operate in the digital space, and there is a service that is rendered in Kenya, but the beneficiaries are in the Democratic Republic of Congo, what is the tax regime? How do you deal with the tax question? And I told them that that is already happening. And I gave them the example, say, of Uber. Uber sits somewhere in the United States of America. They are controlling taxis in Nairobi, Kenya, in Abuja in Nigeria, and Accra in Ghana. And they are already transacting in this space. And what we need to do as it is now is that we are not well organized to resist them. The net effect is that in the early days of their operation, they get money without paying taxes. And we saw this in the United Republic of Tanzania about a few years ago, when people who were engaged in the mining sector had not paid taxes for 20 years. And I hold the view that in order to ensure that those problems are addressed, we must be able to demonstrate. And yesterday, I was asked to sign a contract that is going to involve an African entity and European entity with footprints in Asia. And they say that in the event of a dispute, the law of England will apply. And I say, why? Why should the law of England apply? So say, I'll give you a neutral law, I'll give you the law of Singapore. I refuse, because there is this misconception that African arbitral processes or mediation processes or African judiciaries are not up to scratch. That is complete balderdash, allow me to say that, because I've had experience with disputes which are based on English law, and African countries end up suffering in a monumental way. There are functioning dispute resolution mechanisms in Africa, and the corruption that we talk about in the judiciary, this is the exception other than the rule. So that we are coming from a background where we are bastardized because of bad press. But lastly, I want to say, Africa already recognizes these weaknesses. Take, for example, the proceeds of crime, the POCAMLA, which we are now applying in many African countries, and Hisham knows better that in Kenya, for example, if 1 million Kenya shillings or the equivalent of 10,000 United States dollars hits your account, then it raises a red flag. And that has been going on for some time. We are beginning to find out whether the proceeds that you are enjoying are the proceeds of crime. And because of collaboration both within the regions and the continent, the windows of opportunity for those who are engaged in underhand activities are narrowing by the day. And I think, therefore, that the African continent, in some ways, is even better than a number of European countries and Asian countries, which are very good at covering their track. And I want to say this because it must be said. If you look at some of these proceeds of crime, they were actually facilitated by European countries. The money that is stolen, where is it resident? It is resident in the territories of the United Kingdom. It is resident in territories of France. It is resident in Dubai. It is never resident in Africa. So if they are co-authors of misfortune for Africa, it has been the Europeans and not the Africans. And I think that we've got to tell this story. And we are beginning to tell it. And that is why I'm happy that these regulations are not just gathering dust and cobwebs. They are beginning to be deployed. And you only have to see what is happening. Hisham will be familiar because I think Egypt is in COMESA. See how we've been dealing with the question of cotton in the COMESA region, how we've been dealing with the question of sugar in the COMESA region, and many other things. So these regulations are beginning to be deployed. They are going to be, the steps may be baby steps, they are going to be hiccups, but it is through that learning process that we are going to grow together. And I conclude by saying, look at Europe, I mean, the Brexit. And is it not a testament to the fact that even when you think you are very developed, you have hiccups and it ends up in a divorce, not just a separation, a complete divorce. But Africa does better and is going to be better going forward.
Thank you very much, PLO. And that's very well said. I have to say that if you look at the banks that have been fined for breaches of, if you're looking at corruption, financial crime, etc., that's very few, hardly any African banks have been fined. So you have made a point there. The whole perception of risk in Africa is because Africans haven't told their story enough. Because if I take, I'm not going to mention names of banks, but there have been a lot of fines in the past 10 years, some of them in the billions, of some of these major banks for breaches and sanctions, regulations, and anti-money laundering. And it hasn't been African banks. I haven't seen any 100% owned African bank involved in any of these fines. So that's a good point that you've made there. I've got a question for Hisham, and the question is, 60% of Africans are in the informal sector. Only a fraction are banked. How do we deal with this to ensure inclusion of all people with these new opportunities?
Okay, people talk, I mean, even in Egypt, we hear about the gray economy, and we have to understand that small business and medium-sized business, they resort to the shadow rather than the official economy for a reason. And the reason is not tax evasion. The reason is fear from dealing with government, fear for dealing with bureaucracy. So I think if we reach the point that, and I think many African countries are getting to that point, reach the point that you're dealing with the government is pure digital, that will give a lot of comfort for small businesses and large businesses and medium size to come out of the shadow into the spotlight and the actual economy. It's not about tax, because I hear reduce tax down to zero, make it, give tax incentive for people who comes into the official economy. Trust me, it's not the 5 or 10 or 20% tax. It is the fear from, I would say, petty corruption, the fear from bureaucracy, the fear from red tape and approvals, and there is a government employee who makes your life difficult, so he will stop your business. Trust me, if governments can reach the point that all the dealing of individuals is done digitally, either those individuals are small businesses, medium size, large size, individuals, tax filing, permit approval, license renewal, all of those things, if you do it through the net and the network is available to support that, trust me, the 60% will drop. It will never go down to zero. There always will be gray economy, but that gray economy in the range of 10% to 20% is acceptable, but the 60% is too high. And it's high in our continent, it's high in some European countries as well. I'm not gonna name names, but it is all about the red tape, not about the tax.
Thank you very much, Hisham. I'm gonna check whether we have any questions coming from the audience.
There was one question, I'm sorry.
There was one question, yes, you're absolutely correct. And the question is, do you see any positive things about the crisis? Are there any new startups you have envisaged?
There was another question, maybe came directly to me as well, beside that
one.
Listen, crisis means opportunity. If anyone tells you that crisis is the end of the world, just turn your back, look the other way around. Because every time in my career, in banking or life, we came across situations where there is a crisis, there was an opportunity. The people who pick the opportunity and flourish out of that are smart people. Smart people who don't hide their heads on the sand. They confront the problem, see where the opportunity is, either that opportunity providing a service, producing a product. For example, and I'll give you an example in our situation in 2011 with the political unrest in Egypt. We sat down together as a board members and top management, and we said, what we're gonna do. We don't know how things will settle, but to settle politically, it will take 3 to 4 years before we get back to normal. And we have decided that we're not gonna stop business. We're gonna go and buy more branches because it will be cheaper to buy them. We're gonna go and invest in technology and invest on infrastructure of our technology. And we're gonna invest on people. And we started to do that, and everyone was looking at us, are you guys mad investing at this difficult time, hiring people, training, buying properties, investing in technology? We said, yeah, because this is the best time where we can do that. That investment and that decision give us a clear edge after that. And this is how CIB positioned itself as the #1 private sector in Egypt, because we invested during the crisis. We did not hide our head on the sand. It's not the end of the world, okay? The other question I want to answer is about the compliance, corruption, know your customers, and so on. The more harmonized policies among the African central banks, it's going to be easier for dealing with the KYC issues. And as Professor mentioned, Kenya, they have very stringent regulatory requirements for know your customer, cash transfers, the same thing happening in Egypt. I think more, I would say not only most, but all the African countries, they follow the KYC and anti-money laundering by the book. The problems, as you rightly mentioned, that happen internationally. Yes, people do mistakes, banks do mistakes, but there is a big difference between genuine mistakes due to work pressure and deliberate mistakes, like very much like keeping a close shut eye for something wrong for profitability. This I haven't heard of in the African banking sector, but it happens overseas that people keep their eyes shut to make more money. It's not the case within our continent, or at least I can talk about my country and Kenya because we are involved there. I haven't seen that.
Thank you very much, Mr. Hisham, for that. And we're going to go to the PLO for the last question before we round up. And the question is, what is holding back a continental interest in the energy sector in DRC, despite the huge potential for expansion in that sector? And there's another question for PLO. I'm going to ask both, and perhaps you could address them in that one final speech. And the second question is, what is your take on policy credibility on the continent? Does that not adversely affect investment risk perception on the continent? Thank you very much.
Let me weigh in by responding initially to the question of policy credibility. I think a number of governments now recognize that policy credibility requires policy stability and policy predictability. And I use those words very deliberately, that if you are going to be a long-term investor, you want to be sure that a certain policy position which is translated into a legal future so that it aids in your planning. And I think that is beginning to happen. And that is beginning to happen because of the regional cooperation. Sometimes because countries who are approaching things in once again by foreign countries to break away from the regional approach into a bilateral East African. They were going to ban second-hand clothing. Rwanda implemented the full hog, and the Kenyan government has reneged on it. And they have reneged on it because the Americans are now persuading the Kenyans. They are persuading the Kenyans to engage into bilateral collaboration with them to have the most favored nation status. I think that if we are strong and if we recognize that our safety lies in our more coordinated regional approaches, then the fear of lack of policy coordination and predictability is going to reduce. And to me, that is a good thing. So there is no need for fear. I think once again, we can see that the regional bodies are telling countries, please don't be enticed to run away from your declared policy position because it confuses investors, it undermines investor confidence to the detriment of those who can help your economies. But Hisham will speak to it a lot more robustly. The second question is about energy. We know Africa recognizes that if we want to earn the dividends of industrialization, energy is a key factor. And all of us are aware of the Grand Ethiopian Renaissance Dam, which is pitting Egypt and Sudan against each other. And I hope that it shall be resolved, because I hold the view that the dam should be there, 10,000 megawatts, but it should not be to the detriment of the downstream countries. We should ensure that Egypt and Sudan do not suffer as a result. That is why I think coordinated approaches is very critical. We also have the refugee, the Julius Kambarage Nyerere Dam, which is being put together in Tanzania, and we are going to have 2,000 megawatts. The Grand Inga Dam in the Democratic Republic of Congo, which easily could unleash into the market through hydro 40,000 megawatts. So I have no doubt in my mind that these are areas that are receiving the attention of the African continent. And I'm not only talking about hydroelectric power. Many of you will be familiar with the wind farm in Kenya, the big solar facility that is being done by the Moroccans. And we also are aware of the geothermals that are being used. So there is activity in the continent. And I think that in the next 5 to 10 years, or give it 20, we are going to have sufficient energy to be deployed to undergird all these developments that we are seeing. I did not mention natural gas in Mozambique, and I did not mention natural gas in Tanzania and in the Somali area. So a lot of things are happening, but I want to conclude by saying that conflict must be addressed. Right now, the gas deposits in northern Mozambique is being threatened by the insurgency by the Islamic group. And we also know what is happening in the Sahelian group. So we cannot pretend to talk about all these beautiful things without being sensitive to the safety of investment and investors. But I think we are moving and surging ahead, the problems notwithstanding.
Thank you very much, PLO, for that. And before we round up, I will quickly ask Hisham for a final word before we round up this session. Thank you very much.
My word comes from a very short story. We were competing as a bank for the best bank in emerging market. And a few of my colleagues said, no way, this is very hard. How can we be the best bank in emerging market in the world? I said, let's try, trust yourself, okay? And we did, and we won it twice. So what I want to say, we should trust ourselves as African. We are good and we can. So always keep in our mind, there is nothing impossible. You are as good as your dreams. And this is my final word.
Thank you, that's powerful. We should trust ourselves as a people. I have taken that on board for myself as well. Thank you so much, Hisham and PLO, for this wonderful session. I'm going to, it's been such a pleasure. It's been such an honor to have you both here. And I think it's been a really incredible conversation. Before we round up, I'm going to quickly ask the Zenith Bank CEO, Group MD and CEO of Zenith Bank PLC, as they are our premier sponsor, for a final words before I deliver our closing remarks. So welcome once again, Ebenezer Onyego, who's the Zenith Bank Group Managing Director and CEO for Zenith Bank PLC. Over to you. Thank you so much.
Thank you very much, Adjoa. And let me first and foremost extend my appreciation to PLO and Hisham. Very interesting, inspiring, and insightful discussion. And I'm very, very convinced that the feeling across Africa is the same. If the feeling across Africa is the same, then the willpower to move on must be there. We've been on this spot for so long. We've allowed the wrong narrative to be given of Africa, a jungle. Some said only monkeys live there. We don't have cars. We don't have high rises. Those are things of the past. The COVID has drawn a line. And the line for Africa now is about progression. The line for Africa now is about execution. We have pontificated a lot. I believe for me, the primary reason why we sponsor this is because we want to be part of that vanguard to changing the African narrative, helping to rediscover Africa, helping to redefine the growth focus of Africa. And I also like what was said by, I think, between PLO and Hisham, they said it in two different ways. Africa has been operating in small, different silos. We've been operating in different small silos and often competing against ourselves negatively. It is time Africa came together. Let's have a formidable force. Africa can be the food basket of the world for organically grown food. If you look across Africa, Africa abounds with rich arable land. We can become the food basket of the world. Not only will we grow the food, we will process it. But what we have is that there's weakness across the whole of Africa. Like I said in my contribution in the morning, Zenith Bank is very committed to this. And indeed, after this session, we'll be reaching out to the African Continental Free Trade Zone office in Accra for us to begin to execute an MOU to build a platform, a portal that will provide that basis for us to allow African businesses, African products and services to be showcased to the world. You can't talk about what you haven't experienced. Africans need to experience Africa. Africans need to know Africa. Not much is known beyond what you know in your immediate neighborhood. We have to know more about Africa. We have to explore that. If I need to get anything, if I can't find it in my home country, my next option should be, where can I get it found in Africa? The conversation around homogeneity is also a no-brainer. We've done things differently. Yes, the legal reforms, in all these that we are saying, we need a lot of input from the fiscal authority. We will need to reform the legal system. We need to digitize a lot of process, because I'm one person who believes that the more we digitize the process, the more difficult it becomes for corruption to thrive. If we digitize the process, you need to apply for an application. We have a template that says, that lists the requirements, the documents you need to fill. You fill it, you put it in the system, and there should be a requirement of the timeline for you to get a feedback, so that I don't need to go and queue at any office to ask for any favor. I don't need to begin to lobby as my file move from one table to the other, and I can track my application. By the time we do that, we would have infused a lot of transparency into Africa. So Adjoa, I think the work is just beginning. The work is just beginning, because what we need to do is harmonize all the thoughts that we have raised in this session. And I also like to assure everyone, the whole of Africa, that this is not just a one-off event. It's going to be continuous. And maybe in a way, Adjoa, I'll leave it to you to decide. We held this, today is 21st of August. That's like the third Friday in August. Why don't we begin to commit ourselves that, yes, next year's program will be held the last Friday in August, so that we start getting ourselves committed. And let's list the deliverables. Let's list the deliverables, and let's also create like a platform for all the presenters to be able to talk to each other. Let's rub minds. If we need clarity on the points raised by any of the speakers or a presenter, we can touch base. And let's also make the African Union and the AFCTA like the main anchor. Let's put them to drive the process, so that in terms of reaching out, carrying out regulatory reform, they will be the one talking to heads of states of African companies. Then we can also have another framework where we need an approach to the regulators, banking regulators. Homogeneity will help Africa in so many ways. If we can deal with homogeneity in the area of compliance, risk management, we would have de-risked Africa a great deal. I believe that the time to change Africa is now. What we have now is the mandate to recharge and re-energize Africa for the next phase of growth. There's no other place to go to other than Africa. You are not going to go to Manhattan and bring down all the skyscrapers they have there. It is in Africa that I said it in the morning, it is in Africa that we have the most intelligent building coming up. I remember sharing a platform with Lord Boateng. That was a week ago. Lord Boateng used a parable He said, if you are the last person to get to the kitchen, you don't need to destroy so many things. Africa is getting to the kitchen now late, i.e., we don't need to make too many mistakes. There are too many things for us to learn from. Therefore, we are in a state for us to now accelerate. And we also have to believe in ourselves. Africans must invest in Africa for the world to know that, yes, there's genuineness, there's greatness, there's something interesting in Africa. So I want to thank EBII, especially Adjoa, thank Oxford, thank all the sponsors, all the speakers, starting from His Excellency Mene Wankele, Her Excellency Dr. Amandi, PLO, Hashim, Lord Boateng, quite a number of them that in no particular order. It is very interesting. And we hope that next year we should all congregate and have a repeat. And let's have an assessment so that it won't be a case of pontification and sermonizing. So thank you very much. Very interesting, very inspiring, thought-provoking. We have awakened the spirit of an energized and ready to go Africa. Thank you.
Thank you very much, Ebenezer Onyegu, the Group Managing Director and CEO of Zenith Bank PLC. It's been an absolutely honor and pleasure partnering with Zenith Bank in hosting this wonderful event. Thank you so much. And now I'm just going to round up of what we've discussed today. So thank you all for joining today, and my closing remarks. And so His Excellency Papa Owusu Ankoma, the Ghana High Commissioner to the UK and Ireland, Her Excellency Dr. Amani Abu Zaid, the African Union Commissioner in charge of Infrastructure, Energy, ICT, and Tourism, His Excellency Wamkele Mene, the Secretary General of the AFC-FTA, Right Honorable Lord Paul Boateng, the former UK Cabinet Minister and High Commissioner to South Africa. Ladies and gentlemen, we have learned a lot today. First, the first discussion with Her Excellency Dr. Amani Abu Zaid, His Excellency Wamkele Mene, and Dr. Ebenezer Onyegu gave us the current market trends and opportunities in light of the AfCFTA. In particular, we saw the importance both the banking sector and infrastructure play in ensuring the success of this new agreement. The second panel on the African Continental Free Trade Agreement post-COVID-19 taught us that AfCFTA is necessary but not sufficient by itself. The younger generation needs to be involved to help drive innovation forward, and there needs to be a huge investment in science and technology. A keynote discussion with Right Honorable Lord Paul Boateng and His Excellency Papa Owusu Ankoma reminded us that if you come late to the kitchen, you do not have to break so many pots. In other words, Africa can learn from the mistakes of other continents and use it to our advantage to get a step ahead. In addition, Brexit provides several opportunities for African countries. The third panel on the role of the African diaspora in boosting investment in Africa taught us that the most important resource Africa has is its people, both home and abroad. And if the continent is to realize its full potential, the people need to be the driving force behind its development. Panel 4 that talked about conducting investment due diligence in Africa post-COVID-19. I was particularly touched on how investors can navigate due diligence challenges in Africa. The takeaways underlined the idea that there are certain inherent risks, such as FX, liquidity, and operational risk that needs to be carefully considered and addressed. The panel also emphasized the importance of developing relationships with local partners who can assist during the due diligence process. The panel 5, changing investor perception of risk in Africa. This panel highlighted the current opportunity for African banks and government to reposition strongly as vanguards of the policy environment, and in so doing, purposefully change the narratives around investment risk in Africa. This panel emphasized that harmonization of the African central banks will be key going forward, and we must trust ourselves. To conclude, we hope that the sessions gave you food for thought as to how each and every one of us can be actors in changing the perception of risk and encourage investment on the African continent. A post-summit paper will be published after the conference to ensure that this dialogue and feedback is widely disseminated and used as a guide for current and future stakeholders. It will be a first step in developing a blueprint for the future of investing in Africa and a complement to the efforts of the African Union, the African Continental Free Trade Agreement, and the Secretariat, the African Development Bank, the African government, and all associated regulatory bodies and stakeholders. Thank you to all the speakers for your stimulating contributions. We are very grateful to our premier sponsor, Zenith Bank Ghana Limited and Zenith Bank PLC. Our executive sponsors, Martha Capital. We're also very grateful to Ebenezer Onyegu, together with Akin Oguranti. Ebenezer, who is the Zenith Bank CEO, Group Managing Director and CEO for Zenith Bank PLC, together with Akin Oguranti, the CEO of Zenith Bank Ghana Limited. Once again, we are grateful to our premier sponsors, Zenith Bank Ghana Limited and Zenith Bank PLC, executive sponsors, Martha Capital, the University of Oxford, and the Oxford Said Business School. The event sponsors, Commercial International Bank, CIB, Egypt, Africa Business Alliance, ANRA Training, our panel sponsors, Confident Advisory, and Wambui Wataka. Our media sponsor, IC Publications. I thank all these great sponsors for the tremendous support they have provided to host this conference. I want to especially thank the University of Oxford, Said Business School, and Oxford University Innovation for helping birth and incubate the EBII group. Thank you to all the presenters who took the stage today. A big thank you also to Tim Morris, a British diplomat who has served as an ambassador to Morocco, Mauritius, and South Sudan, who has been a major contribution to this summit. I'd like to also thank the production team here at Oxford, who kept us in line, engaged, and on time. Special thank you to Leanne Sobi, our CFO, Asi Arkhurst, Papa Arkhurst, Augustina Jemandua, Benny Nwama, if I pronounce your name wrongly, apologies, and Paul Akwaba, and everyone who contributed in making this a success. I also thank you to Elom Halliger, who's here with me in the studio. Once again, my name is Adjei-Twum, the CEO of EBII Group. Thank you for joining us today. The summit would have been nothing without our attendees. So we'd like to extend our gratitude to you once more. Let's keep working together to put our continent in the best position to stay ahead of the compliance curve. Thank you very much and have a wonderful evening. Thank you very much.